Hello everyone, this is Paul from the Pin Academy. So today we're going to be doing a top-down analysis on a synthetic index, which is Volatility 75. Now, most people believe that Volatility 75 is manipulated because it is one of the most traded synthetic indices. You could have some point, but personally, I do not believe so. If you're saying it's manipulated, that means almost every instrument that you do trade or I do trade is manipulated, right? But if you do things the correct way, you'll see less of those manipulations and start seeing the correct things to do in the market, right? Now, I've always mentioned to you guys, as long as you've been following this channel, or if you've not been following and it's your first time, I always say that when you're going to start doing analysis, the first thing you should do is make sure you turn your chart to the monthly time frame. Even if you don't want to use the monthly time frame, but make sure you have a time frame that gives you the following. You have time frames that give you the following. One, you have a time frame that gives you direction, right? Then two, you have a time frame that gives you structure. By structure, I mean you can use a pattern or you can use a shape. Then three, you have entry time frame, right? Now, you can have the fourth one, which is refining, but sometimes not very important. These are the core ones. So after getting your entry, that's when you can refine. But the core ones are, you need a time frame that gives you direction, you need a time frame that gives you structure, you need a time frame that gives you entry. Even if you're not going to use the ones that I'm recommending here, it's up to you. You can make sure you use any. Even if you want to use H4 as direction, H1 as structure, and min at 30 as entry, it's fine. But here we do recommend that you get your turning points or your structures when you're basing to get direction. Make sure you get it from monthly time frame. Direction should be gotten from a time frame that is big enough whereby most retailers do not go into those time frames. Remember, this is a war that you're going into. This is a war between people providing liquidity. And remember, the liquidity providers also want to make profits. Where are they making the profits from? They're making profits from the retailers, from me and you, right? So you have to use time frames whereby 95% or 98, 99% of traders are not going into, meaning they will not be seeing things clearly, right? So that's why I do advise use monthly, even higher. Some people even can go to 3 months, 1 year, 6 months. The higher the time frame, the more accurate the turning points are. Now, if you're trading synthetic indices, make sure that you're having turning points in bigger time frames, and we can start from monthly. Now, I've mentioned this in the previous video that currently the market is trapped here, and you cannot see this unless you're looking at bigger time frames. When you go to smaller time frames, I'll just go to a smaller time frame, let's say like H4. You clearly see that there's a lot of noise. Are you seeing this? Most of you keep saying that, okay, the market is ranging, but this is not a clear range. Let me just push it. This is not a clear range, right? The market first went like it was creating a trend line, then it changed. Now it's like creating a trend line like this, right? So it's a bit more, if you'll not be able to see the market or the price movements clearly, right? So I really advise that when you're trading synthetics, mark the turning points, the key ones in bigger time frames. You'll be able to see things clearly. Now, in the last video, like I was saying, we are seeing that the market is trapped here. We need the market to either break upwards or to break downwards, right? And we are still there. Now, when you go down to the lower time frame, okay, the direction in monthly is not yet clear. We're still in a range. But when you go to a lower time frame, we're going to see that we can actually get trades, because in a range also you can trade. And you know, so, V75 is a bit volatile, so it can give you trades and you can actually make a good number of pips, even if it's a short distance, right? Now, when you drop down to weekly, what do we observe in weekly? In weekly, we do observe that the market actually is having a weak momentum while pushing upwards, right? This momentum here is not so strong while going upwards, but alternatively also, this same price is not breaking the Fibonacci retracement tool, the golden ratio that we normally have. Let me just change this color to from yellow to, let me change it to black so that we can be able to see it properly. You can see here now we're not breaking also the golden ratio, which is 61, right? You can see the market has attempted to break it several times, but it has failed. Let me just show you here. The market came here, it was rejected. It came back, it was rejected, and it's moving in this wedge. Why do I say that the momentum is weak? Because we have 2 sell candles, 2 weeks holding all these weeks here. So there's a possibility the market may want to come and grab liquidity down before either going up, or there's a possibility the market may want to go and grab liquidity upwards before pushing downwards, right? So you have to be careful. And how do you be careful by this? Is by checking the next lower time frame to see the best possible structure the market is creating down there. Now let's go down to daily and we observe. Now when you come to daily, we can now put in some other aspects that we have been teaching on this channel. One of them is the trend line. For example, when the market was being rejected from this the golden ratio in weekly, it was rejected from here, it went up, again it came back, it was rejected. But there's one thing I want you guys to observe is that the market was creating a higher low. The market came and created this low here and pushed up. The next time it came back, it created a higher low. Then it pushed up, created a slightly higher high. Now, currently, you can see the market is like creating a series of rejections here, but also at a higher level than the previous one. So there's a communication that the market is trying to put there. And also in the previous video, I told you guys that if the market does not break this area here, there's a possibility it will come back. I also mentioned that the market created this impulsive move here, went up, we expect the retracement, and then a push up. Now this push up happened, but again, the market broke down aggressively, and you can see the retest happened here, making this a false breakout. I've mentioned about false breakouts a number of times on this channel. I really hope you guys now know how to utilize it, and it happens almost all the time and almost every day. So the market created a false breakout here, then broke back down and retested this point here with a number of rejections. So now the market is also losing, also losing momentum to push downwards. Why? Because we had the high here, we had the higher low. Sorry, we had the low here, we had the higher low. Now currently we're attempting to create another higher low here. Now, what do I expect from V75? These are the alternatives that I do expect from V75, because it's one of the things I trade most. I do expect this area here to be tested. Why? Because the market has previously showed us that it's respecting necklines. You can see this neckline here was respected here. So also I expect if the market is to continue making higher lows, the market should come a little bit and grab liquidity from those who are using trend lines by testing this point here before pushing higher to test untested levels. Like we saw in the bigger time frame. Now, which level is it coming to? We have untested level here, right? Now, if you're to go back into a bigger time frame like weekly, you realize that this time frame actually is properly aligning with this previous low here. Are you seeing this low here? It's aligning with this area here. But when you go down to daily, you'll see that actually it tells us that there was a false breakout of some sort, right? Here. It shows that this is a false breakout, that the market actually needs to come and test this point. Even if it's to continue dropping down, we first need to grab liquidity, right, before we can go into the correct direction. But right now, since we're in a range, the direction wise, remember the direction we have in monthly is ranging. Weekly is telling us that the momentum upwards is weak, but we cannot fail to trade because it's giving us highs, right? It's not breaking the golden ratio downwards. So it's also not decisive. We are ranging, but while creating higher lows. Now, daily is telling us, daily is telling us that we are creating higher lows. So meaning that we can actually utilize this by looking for buys. Make sure that you're always going in the direction that the market is showing you. Do not go against it. There's a common saying that trade with the trend, but in this case, it's not trending. So what do we have to trade with? We trade with the structure or the turning point that the market is giving us. And in this case, the market is giving us turning points of higher low. So if the market can come into this area here, look for a change of trend. Do not just enter into the market. Look for a change of trend or also momentum. Then you can take your trade from around here. You can target this point here, or even you can target above. That is one. Now, secondly, if the market comes aggressively and breaks this point here, wait for a weaker retest of this level here, this area here. And then you can take your trade up to these untested levels down here, right? Those are the two alternatives. I've a bit gone into much explanation because I really wanted you guys to understand. Most of you guys say that synthetics are manipulated here and there. It could be true. It may not be true, but personally, I do believe if that statement stands, that means everything that we do trade with candlesticks is manipulated, right? But the best thing to do is just make sure you're marking your levels in bigger time frames, or at least get a number of time frames that you're basing on to make your decision, and everything will be easy. So those who trade V75, I really hope this multi-time frame analysis helped you to see things clearly, and also you've seen how we implement whatever we teach on this channel. If it was your first time coming across, make sure you give us the likes button, and also don't forget to subscribe. We do produce such content almost every day. Have a great time.